all about the transition to modern accounting that we're driving here at Blackline. For those that haven't heard of Blackline, we are the leading financial operations platform used by 4,000 finance teams globally and about 300 finance teams here in ANZ. I'll also be joined by Amendra from Octane Solutions and Caspar from Tyro, who will introduce themselves a bit later. As we're speaking today, if you have any questions during the presentation, either mine or Caspar or Amendra's presentation, please share them in the chat and we'll answer them during the Q&A. And please remember to hit mute on your microphones. So as a part of the agenda today, what we'll be covering, I'll introduce who will be talking, and then I'll be speaking about, what is the transition to modern accounting, where are finance teams at now, and where are we trying to take them, and what is the benefit that teams can get once they've reached that modern accounting. After that, hopefully everything I said will be put into context by Caspar and Amendra's fireside chat. So they'll be discussing their recent journey with Blackline, implementing Blackline, I guess how they started, how they implemented, and what they're looking to get out of Blackline now. Then we'll go into a Q&A. So please remember to put in some questions. And then I'll have some further actions should you want to look at Blackline and modern accounting a bit further. So who's talking? Myself, Sean Redmond. I come from an accounting background. I've spent a good portion of my career selling finance solutions to finance teams as well. And now I represent Blackline, who is a leading cloud accounting platform and a pioneer in the automation of manual accounting processes. Also been kind enough to be joined by Caspar Demain, finance project lead from Tyro Payments, who has spent a good portion of his career implementing solutions, including most recently Blackline, as well as Amendra Pratap, managing director of Octane Solutions and one of Blackline's leading implementation partners, who worked with Caspar's team to implement Blackline. Cool. So why did Sean invite you here, and what is he trying to solve? So the reason that we're here and what we know at Blackline is that finance leaders at the moment, they need more capacity within their current teams to meet the demands put on their teams from the wider business. So what does that mean? What that means is finance teams are being expected more and more to collaborate with the business towards those strategic objectives that move the business forward, the wider business forward. So what we have here is the strategic finance model, or the operating finance model that we're seeing happen in the market. Basically, there's three general categories that we're seeing that accountants could be spending their time on in any given minute. You have here at the bottom, which is the traditional accounting, the managing risk and compliance, reporting and optimizing business processes. But now you have as well more and more activities that relate to the wider business's strategic objectives. So, whether that's a merger and acquisition, a digital project, an ERP upgrade, whether your company is trying to IPO or aggressively grow, more and more finance is being expected to contribute to those objectives. But the problem that we're finding is that the teams are already so thinly stretched with the day-to-day managing risk and reporting that they don't have enough capacity to contribute to those objectives. And that's essentially what we're trying to solve with modern accounting. So what are those strategic objectives? I keep talking about strategic objectives. These are some of the most common ones that we're seeing out in the market. So, whether it's preparing your company for growth, upgrading your ERP, getting ready for IPO, mergers and acquisitions, or it could be as more simple as just process efficiency, headcount control, retaining your talent by giving them the top tools in the place. What we're finding is most finance teams are already stretched so thinly, but they're still being expected more and more, especially at a senior leadership level, to contribute to those strategic objectives while still managing the day-to-day. So, if your team is already time poor, how are you going to find the capacity? You're probably not. The reality is that if your team is still performing processes the same way they were 10, 15 years ago, you probably don't have enough time for the work that goes above and beyond that. And we at Blackline know that is because traditional manual accounting is not sustainable. Being stuck in the spreadsheets, exporting data, manipulating data, substantiating records manually, those email approvals, we believe are all long due for an overhaul, given the technology that we have available to us today. And by transitioning to modern accounting, finance teams are going to have that, or going to be able to unlock that additional capacity to unlock their highly educated CA, CPA, maybe even IPA qualified accountants to get out of that advanced data entry, so to speak, more or less, and start driving real business growth. Look at, I guess, the notorious month-end process at a deeper level. I'm sure this looks very familiar to a lot of you here. Yet with change in technology, this process has remained largely unchallenged for 10, 15 years now, but is still one of the biggest time sucks on every finance team. So, you have different people in different locations at different levels of the finance teams, preparers, reviewers, approvers, the managers, doing different processes at month end across different technologies. They need to get different data. Obviously, they've got Excel, which they might have their checklist in. They might be approving reconciliations over email. And all this work over different mediums, it's hard to track. There's a lot going on. There's not much clarity, and it needs to be done on a deadline. So looking at it a bit deeper, some quick stats on manual accounting to kind of quantify that spiderweb that we just looked at. These are from the Hackett Group as well as the Gallup Group to put it into perspective. So 69% of finance teams that were surveyed by the Hackett Group said that in regard to their financial close, manual effort was the number one bottleneck in the process. So just by removing that manual effort, putting things into the cloud, you're going to be unlocking a lot more capacity to your team with that alone. Obviously, there's spreadsheets. Nothing wrong with spreadsheets. Obviously, spreadsheets play a critical role in accounting teams. However, with spreadsheets, there's no way of detecting human errors that take place in those. 88% of finance teams that were surveyed said that, I guess, their spreadsheets had errors because of human error, which then flows into risk. If there's errors, human errors that can't be picked up in those spreadsheets, then how do you know, or how do you have that confidence in the numbers that you're reporting every month? It leaves you open to risk if the business is making decisions on those numbers. And the one on the right, which is a very important, especially now in today's context, 34% of productivity is lost for actively disengaged employees in finance. This is from the Gallup Group. So, if you're coming to work and everything that you're doing is manual, you're staying late, there's a good chance that, you might not be the happiest, have the best morale. And that's a problem in today's environment with the things like, the Great Resignation. There's obviously a shortage of talent in the market. So anything that we can do to keep our finance team happy is going to be of great value to the business. So where do you stack? This is a recent study from CFO.com, which correlates really well to seeing in the industry. But the median time to close the books each month is about 6 to 7 days. The top performers are getting it done in a week, while the bottom performers are taking 2 business weeks to close the books. In some circumstances, I've seen 15 days to 3 weeks to close the books. However, that's extreme. But what you see is what separates the top performers from the bottom performers is an entire week of productivity that could be spent elsewhere, but isn't, because the month-end process hasn't been streamlined. So it's safe to say that if your month-end is taking longer than 5 days, there's an opportunity to increase your team's overall capacity each month. And that opportunity is realized by transitioning to modern accounting. So what is modern accounting? To give you a very high level overview, what it looks like, everything's unified. Your processes are all being done and managed in the one place. So everything's in the cloud, it's on demand. All your source data is being integrated automatically into, say, Blackline. You have your trial balance coming in, you have your sub ledger, your general ledger, your fixed assets register, your bank account data, all coming into the one place. And then because everything's there, everything's coming in automatically, that gives you the ability to put in some rules. So now you can start automating some of those, your reconciliations, your bank recs that are coming through. A lot of the matching can be automated because the information's already there. Now you just need to put in some rules to automate some of the work there. And what you'll find is because everything's connected and you've got some of the, I guess, the busy work being automated, come the end of the month, you're already going to have a good idea of where you're going to land in terms of for your finances, what you're going to be able to report on, because a lot of the groundwork has already been done throughout the month, which is significantly reduces the time it takes to close. So if we dive a bit deeper, some key benefits that you can get from moving your record to report process or your month-end process to the cloud. You're going to be able to document activities automatically store supporting documents in the cloud, be able to see who approved, who did what, who certified what, when. I guess what that does, it removes the Excel sign-offs, it removes the email archives, SharePoint folders, everything's in the one place. Because everything's in the one place, you're now in the cloud. And what that means is your team can complete month-end activities anywhere on demand, which obviously is extremely important the way that we work now. Because of that, you get accountability through visibility. All your tasks are integrated within Blackline. So you have your checklist there. Everyone's working from the one place. You'll be able to see who's up to what and when, and what tasks are dependent on other people in order for you to complete them. So everyone's on the same page. You're going to know where your team's at. Control and standardized reconciliations is a huge improvement as well. What we find, and you might be able to relate, but everyone has their own kind of way of doing certain reconciliations. You'll be able to set exactly how reconciliations are done. You'll be able to display the policies. You'll be able to enforce segregation of duties, the workflow. Everything will be set up in the system so that your finances are being done compliantly. And this is one of my favorite benefits, the shift to auditor self-service. Because your month-end, your record to report, it's all being done on the cloud now. You'll be able to potentially reduce your audit time each year. So what that means is, instead of having the auditors come and say, sit in the boardroom for a couple of weeks or a month, and ask you and request information to do their testing, what you'll be able to do is give them a login to Blackline, give them access to everything that you want to give them access to, and then they can do their audit, from anywhere, so to speak. And that's going to reduce the amount of time that you're going to be spending with them each day that you could be spending on your job. A fun fact, out of all companies, this is on our website as well, after Australia Post implemented Blackline, they were able to reduce their audit time to 1 week, which is phenomenal. So you could read that on our website as well. Other benefits as well, automate for efficiency, which we covered on. Because you're automating, things are getting done continuously, which increases time to the team and gives back that time to keep them happy, keep them on the value-added jobs, get them out of the manual work, and keep them around as long as possible by giving them the best tools. So, coming back to the strategic finance operating model that we touched on just then, what we find is that by transitioning to modern accounting and realizing all of those benefits just discussed, it allows finance teams to, yes, get this done by putting some of it on autopilot, which will release time to actually contribute to those strategic objectives that will hopefully elevate the finance team to that status of strategic advisor in the business. That all sounds great. So where we find teams now, and where you probably are sitting at now, is somewhat a manual month-end, manual accounting. You've seen what modern accounting is about now and Blackline, but how do you get there? What's the first step for teams contemplating this journey? The first place that we encourage all finance teams to start is with a listing and an analysis of their current accounting activities, which we call an activity analysis. So what is the activity analysis? It's essentially a listing of all the activities that your team would do during a month-end period in order to qualify how long your team's spending on each activity. So to put that in perspective, what we're trying to do, we're trying to make sense of what your team's happening so we can see where the improvements are and what we would potentially gain from modernizing the process. So, this is the traditional month-end process. I'm sure this looks pretty similar in a lot of your teams, but you have the steps: completing closing activities, review closing activities, prepare the unadjusted trial balance, gather data, consolidate, and then prepare the financial statements. But what you actually see and what you'll be able to identify in the activity analysis is all of those in between steps that are inherent in a manual process. The downloading of data, manipulating data, requesting supporting docs, email approvals, waiting on sign-off, chasing down a colleague, asking where they're up to. They're all hidden steps that can be eliminated alone just by centralizing and putting it on demand in the cloud. And then when you start to automate those actual steps, the results are, phenomenal. So how do you start? How do you figure out, how much time I'm actually spending and where could I be? How much time could I save? We do that with the activity analysis. So the activity analysis, it's a benchmark examination that we have already made from surveying our 4,000 plus customer base to understand exactly on average how much time they were spending doing the same tasks that your team's doing in month end, before and after Blackline. And what you get from that, you'll be able to make a rational decision on whether it's worthwhile going down this journey, because you'll be able to see, okay, these are all the activities, this is how long I think they're taking, this is on average how long they're taking with Blackline. I could save X amount of time each month. Let's look at Blackline. That's definitely a first step, and which I'll touch on as we conclude today's presentation. Recent Blackline implementation. So I'll hand over to Amendra and Caspar.
Thank you, Sean. Was really good having an overview of what all Blackline does. and how it helps the organization. I was also surprised to hear that you've got 4,000 customers worldwide. The last count, I knew it was around 3.5. So obviously, COVID has been good for business.
Yeah, absolutely.
All right. I'll just quickly, for people who don't know me, I'm Amendra. So I'm the managing director for Octane. Today we'll have a good chat with Caspar. It's been absolute pleasure working with Caspar implementing Blackline because Caspar brings a very in-depth background of not just system implementation but also had prior experience with Blackline. So it was very interesting to work with him, and he's a very thorough professional. So doing a project with him was exciting. He did keep us in check at times, which is always good. So Caspar, why don't you give us a quick introduction about yourself and perhaps a bit about Tyro as well for those who don't know Tyro.
Sure. Thanks for that introduction, Amendra and Sean. So I've been at Tyro for around a year, and in that time I've already covered a fair bit of ground. In fact, my title isn't even still finance project lead, but I do still have an overarching responsibility there for finance transformation. So the Blackline implementation was very much in my wheelhouse there. For the benefit of the people who don't know what Tyro is, so Tyro is a fintech, and we're essentially the 5th largest payment processor in Australia. So behind the big 4 banks, we are the next largest processor of financial transactions, primarily in the sort of bricks and mortar, but card present, card not present payments market. So next time you go into your local coffee shop or into your local shop and you wave your card or your phone over a terminal, have a look at the branding on the terminal, your receipt, and you'll be surprised these days how often it actually says Tyro on that receipt. So that's who Tyro are. We have a relatively small finance team, and so just to give context, so the 5th largest, we're about 600 employees all up. We're probably about 18 people of those in finance, so a relatively small finance team. And as Amendra said, we've just implemented Blackline, so we've been using it for I think we're about to go into our 3rd month end using Blackline. By contrast, prior to Tyro, I worked at News Corp for 8 years. And my last role at News Corp for the last probably year and a half of that was heading up the finance shared services teams. That included financial accounting, a much larger proposition than Tyro. We had about 25 financial accountants in the team there, and we had a reasonably mature Blackline implementation, doing the balance sheet recs for the whole business. So that covered off probably around 1,400 balance sheet recs a month. So much larger than Tyro, where we're probably doing between 100 and 120. So that's probably my brief intro to myself and my interactions, both current and historic, with Blackline.
Thank you.
We'd already had, I think, with yourself, Amendra, some initial conversations, and so Blackline was definitely something that was sort of in our crosshairs, so to speak. But certainly my observations early on, and I'm not sure to what extent this resonates with the audience, but we had an extremely manual reconciliation process at month end. So getting to the actual closing of the GL was not too bad a process, but then the actual balance sheet recs themselves were extremely manual. So by way of example, so all the balance sheet recs were housed in one shared document, but the document was too big for more than one person to work in it at once. So everyone had their own mini versions of the document. All the reconciliations were prepared in Excel. We'd do a download of the trial balance from Workday, which is our ERP. People would use lookups then to bring those balances into the individual recs. We would copy and paste all the individual support, whether that was bank statements or invoices, email confirmations, etc., etc. So all of that would be copied and pasted into the individual reconciliations. Everything was Excel based and linked. All the comments and review points were then essentially, typed into the spreadsheet by the reviewers. Everyone used a different mechanism to sort of maintain the status of those, whether they use the cross out capability in Excel to sort of cross through the text, or they'd color it green, or they'd make it bold, or they'd type something next to it. So everyone managed that differently. And then once you've done your recs, so everyone had to then wait until the master document was available so they could go in and then copy and paste all their recs out of their own working document and into the main working document. So
now that you've got Blackline, are you starting in fairly early on though? Are you starting to see the change, having the workflow in place, having the reliance on Excel going away now?
Yeah, so if I sort of maybe touch back on the prior question a little bit as well. So I sort of talked about what were the pain points. If I think about what were we actually hoping to achieve through the Blackline implementation, and you'll have heard me say this before, Amendra, but I always think of it under three broad headings, which are scalability, collaboration, and governance. So when I think about yes for Blackline, but really any system implementation, those are probably the three key themes I'm thinking about. And so where we are now with the Tyro implementation and the outcomes of that implementation, scalability is more something that we kind of now know we've built in. We haven't actually increased the number of recs that we know that we need to do, but we know that through some of the Blackline feature set and just the fact that there is more automation, we know that it just takes us less time to prepare a rec and to prepare, the overall month-end setup. We're not having to roll over spreadsheets, download trial balances, etc., etc. So we've sort of created an environment where, if we do need to start preparing more reconciliations down the line because we decide we want to manage our balance sheet differently, or we go through an M&A process and acquire another business or whatever it might be, we know we're set up in that way. I think collaboration kind of speaks for itself. We've moved away from this environment where everyone's working in spreadsheets, they can't get into the main spreadsheet. The reviewers all have to work. Prior to that, the reviewers had to work consecutively, so they had to wait until the spreadsheet was complete, and then one reviewer could go in. They'd have to do all their reconciliations, and then once they'd finished, then the next reviewer could go in because they couldn't be in there at the same time. Whereas obviously with Blackline, it's a single platform. Everyone can log in at the same time. Everyone can be preparing their recs simultaneously. Reviewers can prepare them once they're finished. They can send back with very clear comments on what needs to be addressed now, or make it clear what needs to be addressed the following month. And the governance really falls out of that. The fact that you can track comments, you can track how many reconciling items do individual people have, what's the age of those items, what's the action plan for the resolution of those items. And as I say, we're only about to come up to our third month end with Blackline. So some of those are benefits that we're anticipating realizing rather than have realized already. But the collaboration piece is probably the main one now. We know that it's taking less time for the team as a whole to complete because they can all work simultaneously. And the governance piece is also starting to deliver because we're evolving. We can get clear reporting on how many reconciling items do we have that need an action plan, and how old are they? How many are older than 60 days, 90 days, whatever it might be.
Coming back to the point you made earlier on the governance, speaking a bit more about the risk, now that you've got Blackline, do you have any comfort factor that you've eliminated or eliminated some of the risk in your month-end process or in your processes generally?
Oh, so the risks, sorry, the risks in general, you mean, or around? I mean, the risks of using Excel is obviously lots, but it's around, I guess, there's around the accuracy. It's obviously very easy for someone to make a mistake in Excel, or when you've got linked spreadsheets, not to update a link. People are using lookups, people are using pivot tables, so the risk of an error there is substantial. But there's also the more sort of commercial risk, if you like, of items just not getting resolved on a timely basis, because we didn't have, with the Excel tool, we didn't have any kind of reporting per se there. All we had was the individual recs, and you'd have to go through the individual recs to identify the items, and then, as I sort of mentioned earlier, try and figure out how old are they, what's happened, look back through the comments that people have put in there. And when you get staff turnover and different people come in and there's initials or there's not, or there's color coding, and it's like, what does all this actually mean? Whereas with Blackline, you can very clearly, you can have your dashboards or reporting on, out of my 120 recs, this is how many have reconciling items over a certain age, this is who they belong to. You can drill down into it, see what action plan they've actually set up within Blackline to get it cleared. So it really enables you to pinpoint those issues and drill down on them very, very quickly.
Out of the system world into the implementation side, then what was your general experience? So you've implemented a number of systems, not just Blackline. You've been exposed to system implementation. What was your experience in this implementation?
So I think I would say, look, I think overall it went pretty well. I think that the difference between doing it here compared to, say, at News Corp was, at News Corp, they generally would throw money at it, not just in terms of, we're going to pay for this system, but let's get a project manager, let's get a business analyst, let's have a team of people focused on doing this. Whereas, with Tyro, we're a bit smaller and a bit more nimble. So it's like, okay, let's do it ourselves. So, actually carving out people's time to focus on implementation is harder to do. So yeah, and then sort of just holding ourselves accountable to delivering on that timetable. And I think overall, there were times when I thought we're definitely not going to make it, and then the times when I thought I think we are going to make it, and as you know, in the end we did make it, so that was good. I think working out the integration between Blackline and Workday was tricky, because Blackline has to ingest the data in a certain format. And so it was hard, and that wasn't a standard reporting format that came out of Workday. So doing the work on our side to figure out how are we going to get the data in the appropriate format to ingest it into Blackline. That took a lot more time than I expected. So I guess another tip would be, it's not about the Blackline guys doing all the work to do the implementation. There is work to do on our side, and having that relationship with the tech guys or the systems analysts on our side, which being relatively new, I didn't have, and I had to build those relationships up and figure out who to go to get some of this stuff done. That was also a challenging component of the implementation.
I see a couple of questions also coming in, so I'll keep asking them as well as we go along. One is, how long does it take to implement? One is, how long does it take to implement? You can answer that, or even I can answer that. Give us your experience.
Oh yeah, sure. So I think our implementation it was probably around 6 to 8 weeks. I think, you can, obviously that time can flex depending on how much time you can dedicate to that. To the point that Sean was making before, teams are stretched, and so it'll be a very fortunate finance team that you can't really dedicate yourself full time to doing the Blackline implementation. But my tip would be, upfront, make sure you really establish, what are the expectations of your implementation manager, and try and carve out that time, because you'll have to go through the process of configuration and providing your test data and doing all the setup and all the work around setting up your companies and your staff members and the roles and activities and security settings. There is a lot to be set up, and you just have to, acknowledging the busyness everyone has, you have to carve out the time. You have to make sure that the team understands on their side what the expectations are going to be, try and be upfront with them, try and avoid needing a lot of their time over month end, and so on and so forth. I think what I found as well is actually prior to the implementation, actually the negotiation itself, not because it was a difficult negotiation, but for myself, having not worked in a financial services environment before, so I had to get an awful lot of internal sign-offs even before we could move to implementation phase, particularly from cybersecurity and risk and compliance, because essentially we're taking our general ledger data and sending it outside the building. And so there were a lot of checks that we had to do in place and protections that we had to get in the contract up front to make sure that happened. So that was a new experience for me. But those would probably be my couple of sort of tips to people looking to do a Blackline implementation.
Yeah, no, I think from our side, our experience was in this particular implementation. We probably spent about under 20 days. We still got few things to come back and do, like task management and all that, now that the system's bedded in. But a typical implementation from our side of this size is around 20 days or under, if things are provided. The one thing that we found worked quite well with the Tyro implementation was having a project plan, and also having the agility to move around the project plan, because as with most finance teams, things change, the availability of resources change. And we were also facing, I think it was the Delta variant or one of the COVID variants at that time. So we had to be agile to allow for people coming in and out as they went into isolation from our side as well at times. So that was an interesting experience. Hopefully we don't have to go through that and put that into our project planning in future plans. I've got a couple of more. The ERP that Tyro has is Workday. So we've got Workday, which we bring in the data from. We've got another question from John, which is Blackline a GL system? No, Blackline is not a general ledger system. It sits on top of the GL systems, brings in the relevant data and allows you to do the reconciliations and your month-end close quicker. So it enhances your GL system. So a typical GL system will not have these functionalities that we're talking about in Blackline.
So we just to add to that, so we use it primarily for the preparation of the balance sheet reconciliations, but it has the advantage that you can ingest your general ledger into Blackline, and then it enables a much cleaner and more automated preparation of recs in terms of how you assign tasks, how you can collaborate in the tool, manage clearance of reconciling items, the rolling over of comments and reconciling items into recs and so on. It makes it's a much cleaner system to use than the traditional Excel.
There are other organizations that also give a login to the auditors when the auditors come in, and it allows them to access to Blackline to see the reconciliation and the sign-offs, and the auditor, it's an accepted form of audit. So that's also something that other organizations do, and maybe one day we'll get to that stage here as well. And that for the others in this session, Blackline has got connectors to a lot of the ERP tools like SAP and probably Oracle and NetSuite. Yeah, we currently don't have a direct connector to Workday, so that's why we had to do it semi-manual way, which is what Casper is talking about at the moment. Caspar, would you have any ideas on how you know that you are getting the benefit? Are you going to be measuring the benefit, or is it just so obvious? What would be the benefits of?
Look, I think I think we'll know, and as I said, we're only going into our third month end, so hard to realise the benefits in the first couple of months, because it's naturally just going to take people longer to get used to working with the system and get things set up and get the comments set up and understand how to put timings on reconciling items and those types of activities. So, but we will clearly be able to measure just the length of time. So to Sean's point about the length of time to achieve your month-end close, so that will be very measurable. We know at the moment which day we currently complete balance sheet recs on, and we'll simply target to complete that earlier. And then I think the governance piece will become clearer over time once we actually start really properly drilling down on the number of aged items, and we'll be able to track over time. We started off with X number of reconciling items over 90 days old, and then we'll be able to see over time how those number of reconciling items reduce. So I think those will be probably the primary items that we can measure. And then obviously just anecdotally, it's just talking to the team, and I've already spoken to the team, and they say, oh my god, it's so much better. I don't have to wait for Belinda to come out of the file, or someone was in the file and they forgot and then they've gone to lunch, so no one can do any work. So there's a lot of anecdotal evidence that it's just easier to use, people are happier using it, and that probably talks almost more to Sean's, when he had his slide of risks, that sort of talks more to the morale risk, and the fact that people have just got a tool that they find intuitive and easy to use, and they're not wasting their time on repetitive stuff in Excel. So that's the more anecdotal sort of tracking of benefits, but there'll definitely be benefits that we can actually empirically measure and track as we move forward.
Yeah, that's interesting. We just talking. We actually starting an implementation at another client site, and one of the key discussions that we've had with them is one of the key reasons that they're putting Blackline in is to try and retain staff, because they can't afford to have anyone leave, and they can't afford to have them come in and do live their life in Excel and doing reconciliations, because everyone's looking to get to the next level up, and putting a system like Blackline ensures that the automation comes in and things like that, which allows people to probably move up the ladder a bit easier within the organization, instead of trying to look for another job in another organization to step up. And also the quality of work is much better now that people have had 2 years of staying at home and thinking about what they do in their work life, which brings what Sean was talking about, the great resignation and all. So that's something that everyone's quite mindful about, and making sure that we look after our people when we ensure that we give them quality of work that will allow them to stay on longer and have a fruitful working life. So that's interesting. All right. I think that's any other points that you want to make, Caspar? Any final points?
No, I think that probably covers off most of the sort of the things I had in mind. I guess the only other thing I might throw in there is I'm glad that you might look at a business that really only has one company. We have two now. We've got sort of, as I said, sort of around 100 balance sheet recs, and you might think, well, that's not that many. I think for Tyro, we chose to go at what I think was a bit of an inflection point for us, so that we could have probably coped with we could have made our Excel process more efficient. I think no one had the time to look at it and pull it apart. But if we're going to grow as a business, and obviously we hope we're going to grow, every business hopes it's going to grow, it would have quickly become unscalable and unmanageable. So I guess my sort of final tip would be, don't wait too long before you're already in the mess. These things, and I know people don't want to invest in finance systems too early. They tend to sort of come behind the investment in, you know, customer facing systems and front end systems. But you know, if you've got the opportunity to, if you know you're going to be a growing business, I would say don't wait too long to look at, you know, whether it's Blackline or other sort of productivity tools, but try and get on board early, and then you can, you know, set yourself up with, you know, a solid set of standard processes that you can build on, rather than trying to migrate a sort of organically evolved hodgepodge of processes into a system.
Yeah, excellent. All right, thanks a lot, Caspar. It was very insightful.
Sure.
Hand back over to Sean.
Awesome. Thank you, Casper. Yeah, it was good to hear about in more detail. Obviously, I already knew, obviously from a high level, from our team and from Amendra, how you were tracking, but it was good to hear, I guess, the ins and outs and what your motivations were, and
Sure,
how you got there, and in how long as well. So I think there was a couple of questions in the chat. Just to clarify, on average, we find it takes between 60 and 90 days to implement Blackline, which is, you know, congruent with how long it took Casper's team. 60 days for companies using NetSuite, and 90 days for any other ERP. We are ERP agnostic, but there's just different methods to get into different ERPs, which is fine. But no, I really appreciate that. That was really good to hear your journey so far. Guys, if there's any more questions that you have, you know, feel free to come off mute and ask them. Otherwise, if you want to see more or learn more about modern accounting and Blackline, a great next step is to look at and have a go at the activity analysis that I mentioned previously. So if you're interested in having a look at that and seeing potentially how much time you could save as a team by upgrading your month-end process, let me know, and I can send you that and give you an overview of the activity analysis. Otherwise, if you'd like to hear more stories from our customers, from people that have implemented Blackline, we have Beyond the Black coming up next month, which will be a lot of workshops, customer keynotes. You can tune in as you want. There's a QR code there as well if you want to scan it and register. But I also sent an invite to everyone that attended. But no, thank you very much. If there's no further comments from anyone, we might wrap it up here. I've got everyone's details here should you want to reach out to myself, Caspar, or Amendra. If no one else has anything to say, then I'll wrap it up here and thank everyone for attending.
Thanks, Sean.
all right, thanks.
Awesome, nice. See ya.
I think there's some nice thank yous coming in. So I don't think there are any further questions. If there are, feel free to send it through to any one of us, and we'll be able to help.
Yeah, or reach out to me on LinkedIn. I'm happy to sort of connect with anyone there.
All right. Thank you. Bye.
Awesome, thank you, bye.
Thanks, guys.